the deflation associated with technology, the cost declines in technology, that's going to cause booms in growth and create all kinds of new jobs that we can't even imagine now. Those disrupted who haven't been able to get to the right side of change, the internal combustion engine is one of those, but there are many. Those who do not embrace AI aggressively to help increase their own productivity so that they can cut their own prices, they're going to be in harm's way. But anyone who faces price deflation, and we think many companies will, is going to adopt new technologies that are going to increase their productivity dramatically. And that is what always happens during a recession. Innovation gains traction. Consumers and businesses are willing to change the way they do things when they're fearful. And we think they're getting fearful. So we think there's going to be a lot more technology adoption, especially around AI, during the years ahead.
Cathie would predicts Nvidia's stock could reach $400, driven by the growing significance of AI and technological innovation. She sees a disconnect between equity markets, which are focusing on cash burn and liquidity concerns, and the high-yield market, which doesn't view those factors as major risk. Wood believes deflation, particularly tech-driven deflation, presents both a risk and a growth opportunity. She explains that companies failing to adopt AI and other innovations to boost productivity are at risk of falling behind, while those that embrace technology will see massive productivity gains. Historically, recessions drive technology adoption, and Wood expects AI to follow this trend, creating new jobs and growth opportunities for forward-thinking companies. In her view, AI represents the most important technological transformation in history, with advancements happening at an accelerated pace compared to previous eras like the internet boom. Wood advises businesses and individuals to adopt AI tools rapidly, as those who adapt the fastest will have a competitive edge in the evolving market.
But there is a disconnect between these two markets. The S&P and equity markets are making distinctions in terms of equities, saying, okay, cash burn, low cash cushion, out to the woodshed. And, the Mag 6 until recently, not seeing any concerns whatsoever. And here we are, the high yield market is saying that cash-rich, cash cushion argument really isn't a risk if the bond market's right. I've already gone through commodity prices as an indicator, and I'll end with the thought, and we've expressed it over time, that the risk is deflation, but it's not all risk. It is opportunity as well.
Will Blackwell have lower gross margins versus Hopper?
I think maybe a tiny bit. I think that when the product was launched in March, they had sort of discussed some price points, on CNBC at one point, and that's a little bit unusual. I think they're very focused on, can we continue to provide value? Can we continue to grow the market? And I think they're probably more focused on that than the specifics of gross margin. There's going to be a little bit of pressure here in the next couple of quarters, which is really just the early stage of that. We're ramping it up. There's going to be low yields initially. I think they've sort of said over the full life cycle, the gross margins will be similar, but they're also expanding the scope of products. There's going to be a microprocessor with Grace. There's going to be an NVLink switch that they sell into these racks. There's a lot of things that they're selling that could have a little bit lower gross margin. So we have gross margins down by about a point next year. I don't think it's that big a deal in the context of how high the operating margins are and how much operating leverage there is. But I think it is, the answer to your question is yes, it is just a tad lower. But that doesn't change the fact that the gross margins are still very good.
This return to AI is a result of Jensen Huang's comments at Goldman, the Oracle.
Oh, no, also our exclusive interview Oracle, outside of the White House. That was killer.
Everything you and I went through, of course, Larry Ellison had to say on that Oracle conference call and everything that came out of the Oracle numbers. Microsoft as well presenting at Goldman Sachs and Communicopia also. So focused in terms of AI and all the opportunity there. And so,
are you more of a believer or you've been a skeptic?
Well, no. I've never been a skeptic in the power of AI to transform everything. What I've been concerned about and continue to be is what it's going to mean for society in general. I'm not a skeptic on what's going to ultimately happen.
Right.
There are still different points of view. One is held more by the Sequoia camp, which we all started talking about earlier this summer with that first report from Sequoia talking and questioning about the return on invested capital from all these hyperscalers, and whether it would all find its way into apps eventually, or how this is all going to play out from a value proposition. But whether or not this is going to transform everything, no, I'm not a skeptic about that, Jim.
You're not. Good, because...
And I haven't been. You know that.
Yeah, it's funny. When you speak to Jensen Huang, what he says is, this has been out called for like 18 months and it's supposed to cure cancer. I mean, I asked myself, does it cure cancer? And you're like, pause for a second to explain that that's not the point. It's about getting data instantly that would take years to put together. I like that.
Well, Semblus skepticism came from recent examples in which doctors were still able to detect cases of breast cancer better than AI right now.
No doubt about it, but it's a right now situation. Just to point out, as he pointed me out, that he has no problems with how well NVIDIA is going to do. His question is the spend and how much. Now, Oracle, Ellison comes out and says the spend's going to be endless because you got to keep up with the neural networks. There's no end to the spend. It's like, well, they build it
and that's one of the key questions. This sort of idea that, at least embraced by Sequoia, that there will be a day when it's kind of done. You won't need to spend as much on GPUs. All the data will be taken in. The models, the large language models will not be complete, but be largely complete in some way, and you'll move on to the next phase. But it won't necessarily be value that's created as a result of those that are running the models.
Right. But I do think that one of the things, like you look at what Tesla's talking about. I mean, Tesla's talking about robots. It's talking about how to make real self-driving. We talk about self-driving cars. Like some of the applications. I mean, it's kind of like when you took chemistry, which I managed to drop because I knew it hurt my transcript. What I did was I recognized that this is about trying to do basic versus applied. The basic's being done by Jensen. The applied is being done by Elon. And the applied is huge.
But chips as well, which brings us to Jensen Huang's appearance at the White House yesterday, talking about AI and the build-out nationwide, how much of a public-private partnership there'll be with the government. Our Megan Casella caught up with them. If you missed it, take a listen.
We've got to make sure that everybody understands the needs coming, the opportunities of it, the challenges of it, and do it in the most efficient and scalable way we can.
Absolutely. Do you see the need for a federal role here in terms of federal investment in combination with private investment?
Well, there's probably going to have to be public-private collaboration in this area because the rate of growth is really quite high. Although artificial intelligence consumes a lot of energy to train, it also saves a lot of energy when you consume it. Because ultimately, it's not about training the model, it's about using the model.
So I'll end up where we started. We're in very, very early days with AI. We think it's the most important general purpose technology transformation in history, and that it has miles to go. And the rate of change is so much faster than it was during the internet age, which was all around Moore's law, which was, in the transistor world, semiconductor world, same performance for half the cost every 18 to 24 months. Today, the changes are not happening in 18 to 24 months. The performance changes for the same cost, they are happening every 4 months. And that's why we think it's important for, anyone, whether you're an employee or a business leader, to think about embracing as many of these, or harnessing as many of these AI tools to increase productivity as possible, because the competition is going to be very intense. Those who adopt these new technologies the fastest are going to win. So with that, happy end or unofficial end of summer, and looking forward to doing this again in the know next month.
Nvidia hit a rough patch after it posted results in mid-August, but this week the stock is up roughly 15%. Joining us right now for more on the company and the sector is Joseph Moore, Morgan Stanley's senior semiconductor analyst. And let me just ask you, Joseph, what happened this week? What's pushing the momentum one direction or the other on the stock?
Yeah, I think for me, the bigger surprise was what happened in the prior couple of weeks. You know, the quarter was really good. They beat by $2 billion, which has never happened until Nvidia started doing it a year and a half ago. And I understand they're wrestling with these expectations issues, and there's some gross margin questions that came about, but I was really surprised at the sell-off. This is our top pick. Demand is very, very strong. And, at this point, focusing on the sort of product cycles and things like that, it's very important. We want to see the company execute to that. But really, the key issue is just the strength of the business. And we heard that from Jensen this week at a conference. We've heard that from a number now of significant executives on the customer side, how much they're committed to these workloads. So I think this is still, a very compelling story. And again, to me, I was I don't know exactly why it was up this week. I don't know why it was down so much last week. But the stock is very reasonably valued with very good growth prospects here going forward.
Cathie would seize Nvidia's stock reaching $400, fueled by the growing influence of AI and rapid technological advancement. She points out that while equity markets are concerned with cash burn and liquidity issues, the high-yield market doesn't see these as major risk. Instead, Wood highlights deflation driven by technology as both a challenge and an opportunity. She believes companies that fail to embrace AI and new technologies risk being left behind, while those that adopt these innovations will experience significant productivity gains and long-term growth. Wood emphasizes that AI represents the most important technological shift in history, happening at a much faster pace than previous transformations like the internet boom. With technological improvements now occurring every few months, she advises businesses and individuals to adopt AI tools quickly to stay competitive. Those who embrace AI will gain an edge in an increasingly tech-driven world. How do you think AI adoption will impact your industry or career in the coming years? What challenges do you foresee for companies that are slow to embrace new technologies like AI?